Topics covered in the chapter: overview of income tax law, important definition, previous year assessment year, and tax laws. And the overview of income tax laws, Article 2 for 365 of Constitution. No tax shall be levied and collected except by the authority of law. Entry 82 of Union list 1 of the 7th schedule of 26 to 46 gives the power central government to make law on tax on income other than agricultural income. It extends to the whole of India and comes to the force of April 1962, Section 1 to 2, 98 to 98 of Schedule 1 to 16. Introducing the Finance Act, a part therefore income tax law is equal to income tax acts, Finance Act, IT rules, circulars, notification, case laws. General law rule or taxation. Income tax of previous in the assessment year for previous year. Exemption: the income tax of previous year assessed by the POC itself. Shipping business and non-resident 44 AB section 1 under 172. And person living in India in opinion of AI, EOP and associates of individual, body of individual, artificial person, form a particular event or purpose. Person likely to transfer the property to avoid tax. Discontinue business. Definition: person election 231. Individual HUF firms LLB companies EOP BOE artificial jurisdiction person local authority. HUF is being defined in this act. However, as per the into law, the firm in its family consists of all male lineal descendants from its common ancestors, including the wives and daughters. There need not be more than one male members in one HUF. Holy Buddha, what's 80? Income tax income tax section 2 for class 24 of income inter alia includes class 2A 3 4 5 6 7 8. Income tax at 2 class 24 to a voluntary contribution received by charitable institution in India, charitable trust, etc. Value of accused profit in lieu of salary taxable under section 172 on 3. Winning from lotteries, puzzle race, card games, and all sort of gambling and bettings. Some received from employees a contribution as some received by employees as a contribution to any PF and SAF and other funds. Some received from the Cayman insurance policy. It includes some allocated and bonus thereof. Consideration received the issue of some received by the Cayman insurance policy, allocation of bonus. Some received by the employees as a contribution to the PF and SAF superannuation fund or any other fund. Winning of lottery, races and games and gambling. Consideration received by shares and an excess of fair market value. Section 56 class 2 or class section 56 class section 2 for 7B. Assistance from a subsidy, a grant of cash incentive, a drawback, a favor, or concession, or a reimbursement from central government, state government authorities in cash or kind other than subsidy, a grant, or reimbursement will determine the determination of the actual cost as per the explanation 10 of section 43(1). Subsidy to or grant by central government or corpus or trust or institution established by central government, state government. Salary, house property reductions. Salaries reduction 8 chapter 6 reduction. Entertainment allowance are only for government employees and professional tax. Section 115 BAC salary reduction 50,000. Entertainment amounts for only for government not applicable. Normal and the professional tax not applicable. Normal tax regime salary reduction 50,000. Entertainment amounts of 5,000 or 1/5 of the salary or actual amount is computation of house property income. As per the section 115 BAC and normal income, actual gross annual income, both higher of expected rent, fair value or municipal value minus higher subject to the standard of rent. Minus higher subject to standard of rent, actual rent, whichever is higher, minus municipality taxes, annual annual value. Municipal value higher subject to the standard rent and actual rent, higher of both expected rent and actual rent. Municipal taxes and net annual value. Section 24A standard deduction 30% is not available, not allowed. In the case of self-occupied property, net assessment value nil for up to 2 property use. In the case of the absence of the rent-free municipal rent-free rent, municipal value is equal to GAV actual rent. Actual rent. Okay, government. So okay. There is an even municipal taxes 30% of the annual net assessment value is also not allowed in deduction. So municipal taxes both applicable and net annual value net annual values as municipal tax in both cases. And section 24 e reduction 30% not applicable. Full amount and interest on borrowing capital let on property full amount self occupied not allowed. Self occupied up to 2 lakhs is allowed. And interest on borrowed capital let out property full amount. Interest on borrowed let out property full amount. Normal scheme full amount. In interest on most property. In the case of self-occupied property, NAV self-occupied NAV is equal to up to 2 housing property. Stock property in assessment value for up to 2 housing property. In the case of absence of rent allowance for the actual fact. In the case is a company opting to tax reduction 115 BAB, no reduction shall be allowed, and therefore even municipal taxes 30% in AV is not allowed deduction. Undisclosed sources of income section 68 and section 69D. Section 68 credit cash credit where there is a sum credit to books assessee and assessee. Where any sum is credited to books of assessee and assessees offer no exemption about the nature and source of therefore explanation of offered is not satisfactory in opinion of AO. Such sum may be charged as income of assessee by the PY. Unexplained loan and borrowing where the some creditor consists of loan and borrowing explanation is offered when deemed satisfaction only. The sums creditor consists of loan and borrowing explaining often to satisfaction only. The lender of such a loan offer explained of the nature and source of the sum and an appointed AO. Such explanation is found to be satisfactory. Unexplained share capital money and share premium. But as is a closely held company, some creditor consists of share application money or share capital or share premium. Explanation offered shall be deemed to be satisfactory only if resident person whose name such amount. The creditor explains the nature and source and the opinion of the AO. Such explanation should be satisfactory. After explanation, loan is called share capital and this shall not apply in the case where the sum is credited the name of FCV registered with a virtual capital fund registered with the SEBI. Section 69 of explanation of investment. But the previous year, assessee had made investment and that is not recorded in books. Assessee offered no explanation about the nature and source of therefore an explanation offered is not satisfactory in opinion of AO. Value which is investment is a tax when the tax is deemed income as per the financial year. Section 16 unexplained income. Section 16 unexplained money. And in the previous year, assessee is found that owner of a money, bullion, jewelry, and other valuable MGJV same is not recorded in books and assessee offered no explanation and satisfactory explaining the nature and source of therefore value of the money, bullion, jewelry, and other valuables may be deemed to be income. Ownership is important and more possession is not enough. Mere possession is not enough. Section 69B amount of investment is not disclosed in the books. Where the previous assessee has made investment or found the owner of the money, bullion, jewelry, and other values. You find that the actual amount spent exceeds the amount recorded in the books. Assessee offer no explanation for the unsatisfactory explanation. Such exceed may be deemed to be income of the previous year. Section 90 CC unexplained expenditure when the previous year assessee had incurred any expenditure and he offers no explanations or unsatisfactory explanation about the source of such expenses. So AO can treat such income. The previous year such expenditure shall not be allowed as deduction under the head. Section 90 is unexplained expenditure where the previous year assessee has incurred an expenditure and he offered no explanation for the unsatisfactory explanation about source of expense. AO can treat it as an income of the previous year. Such unexpected expenditure shall not be allowed as deduction under the head. Section 86 69D amount borrowed and repaid in hundi where any amount is borrowed in hundi and or amount due therein is repaid. Otherwise known as account paid, check drawn on bank. The amount so borrowed is repaid is called deemed income. Repaid is in the course amount borrowed the deemed income and the same amount shall not be assessed again as income of on repayment therefore. Tax tax liability of the cash credits or unexplained income. Section 115 BBE, the tax rate is 60%, and no expenses shall be allowed as a deduction. Therefore, no set of laws are mandatory charge to 25% and 64%. And 271 AAC penalty of 10% of the amount tax subject to certain exemption are levied by the joint commissioner or commissioner. Income tax rates are just relevant for the financial year of assessment in 2025 for individual HUV, BOE, and penalty 10%. Section 115 BBE 60% plus compulsory charges 25% and 24% as an individual in HUV, BOE, artificial relation person, and assessee opts out the default regime of Section 115 BC. Individual 2, 3 achieve an EOP and artificial relation person whether the resident or not. Total income or less than 2,50,000 nil, 2 lakhs up to 5 lakhs 5%, 5 lakhs to 10 lakhs 20%, or more than 10 lakhs 30%. Resident more than citizens up more than 3 lakhs is to over nil. Less than 3 lakhs, then 3 lakhs to 5 lakhs 5%, 5 lakhs to 10 lakhs 20%, 10 lakhs resident to more than 18 lakhs or no less than 5 lakhs nil, 5 lakhs to 10 lakhs 20%, and more than 10 lakhs 30%. Clarify: the person who has attained the age of 60 or 80 on the 1st April shall be eligible for the higher basic exemption. On the 1st April, he attained the age of 60 or 80 in the 1st April 23, 1st April 23 then she is a basic exemption limit starting at the previous year itself of the assessment year. Therefore, the person born on 1st April 1964 and then he shall get a slab benefit of 3 lakhs and 5 lakhs. And basic concept of basic clarity based concept clarity check. Mr. Johnson 83 years basic exemption limit and non-resident on 2,50,000. Ms. John, but if Ms. John as an R is a resident, then that 5 lakhs your rates given up to point. Mr. John is a non-resident and 2 lakh of Mr. John is a resident, then it's 5 lakhs. The above point applicable to resident both non above point 1 applicable to both resident and non-resident, whereas a rates of given point 2 and 3 simplifies only to resident non-resident or maker. So by the total amount exceeding dividend section 11 excluding dividend 11A 115E, so rate is up to such charges up to 50 lakhs plus 50 to 1 crore 10%, 1 crore 2 crores 10 to 15%, 20 to 25%, and more than 5 crores 30 crores. So 50 to 1 crore 10% and more than 10 lakhs 50 lakhs to 1 crore 10%, 1 2 crores to 2 crores 15%, 2 crores to 5 crores 25%, more than 3 crores 30%. In the case of total income including section dividend income and dividend income section 11A capital gain 112 long term capital gain 112 exceed 2 crores, the data such as shall be followed. On a dividend income 1 crore dividend income in the capital on the capital increase of such as 15%. On the balance income excluding 11A up to 2 crores after 2 crores 15%, 2 to 5 crores 25%, and more than 5 crores 37%. Now, in the case of EOP, only consisting only consists of only companies as members such as greater than 4 shall not cost 50%. Illustration: understand the charge in the case of special income. In the special income 20 lakhs, normal income 20 lakhs, total income 40 lakhs. Special income 0. Normal income 0. Special income 80 lakhs, normal income 80 lakhs, total income no. Such as 15%, 1 crore, 1 crore, 15%, 50%, 1 crore, 2 crores, 3 crores. So up to 2 crores it is 15%, more than 2 crores it is 25%. 1 to 5 crores up to 1 2 crores 15%, 1 crore 40 lakhs up to 40 special crores up to is 2 crores 15%, 50 lakhs 6 crores as normal income. So that's 15% for social income and other income 37%. Well, as he does not as he does not opt out for the default tax legislation 150BA, the respective residential status of the individual of tax slabs. When the respective of the resident status, the age of the individual tax shall be as not opt out the default tax legislation 150BA. Up to greater than 3 lakhs, greater than 3 lakhs, then 3 lakhs to 6 lakhs 5%, 6 lakhs to 9 lakhs 15%, 9 lakhs to 12% 50%, and 10 lakhs 15% 20%, more than 10 lakhs 20%. The assessing officer opts for the section 1 and max charge up to 25%. The assessing officer opts for 35%. The max charge can be 30% instead of 35%. With respect to the finance of the 2023, the section 115 BAC as a default tax regime, assessing may choose to opt out. Cooperative society greater than 10,000, 10% each, 10% or greater than 10%, but less than 20,000, 20%, more than 20%, cooperative society 30%. Surcharge. A total income crosses 1 crore up to 10 crore 7%, more than 10 crore 12%. Section 115 BAC inserted in the financial year benefit of the manufacturer cooperative society and the cooperative society opts for the BAC. Surcharge is flat 10%. Firms and local authority on the whole of the total income is greater than 1 crore but less than 10 crores 7%, more than 10 crore 12%. Section 115 BAC instead of the respect of 30 benefit of manufacturing cooperative society or cooperative society of section 115 B such as 10% for firms and local authority. The whole of the total income 30% and the income excess into 1 crore such as 12% for company. For domestic total turnover crosses it of the previous year 21-22 does not exceed 400 crores, 25%, other case 30%. In the case of the domestic company, other than the domestic company, foreign company, not the domestic, it's a foreign company. So on such total income consists of royalty from the government of India concerned purchasing agreement made 1st April 1960 to 31st 1976. 20 fees of technical service received by the Government of India from Government of India pursuance of agreement between 1st March 1964 to 1976 20% on the balance income 40%. Surcharge 1 to 50, 10 crores domestic 7%, foreign 2%, more than 10 crores domestic 12%, but foreign 5%. However, the rate of surcharge is the case of the companies opted to taxable section 115 BAE and section 115 BAB shall be 10% respective of the amount total income. Special tax rates section income and rates. Section long-term capital gain other than the long-term capital gain section 112A 1212A is 20%. Long-term capital gain section 112A long-term capital gain excess of 1 lakh transfer by equity share of the company 10% equity unit of equity share oriented fund 10% unit of business trust 10% and the provision of the STT short-term capital STT has been paid as a provision that STT has been paid on this capital asset. Okay. Security transaction tax has been paid on this capital assets. Section 11A short-term capital gain transfer of equity shares of the company equity of equity unit oriented funds a unit of business trust 15% provided such sales is made after 1/10 of 2004 and short-term security transaction tax has been paid on the capital assets. Section 115 BB. Now, winning on lottery, crossword puzzles such as race, including horse race, card games, gambling, betting from farms 30%. Section 115 BB. Unexplained income, investment expenditure 60%. In concept of marginal relief in the case where the total income exceeds 50 lakhs but does not exceed 1 crore. Surcharge and restriction. Individual achieve opting for section 115B. The income consists of 50 lakhs but not exceeds 1 crore. And surcharge has been restricted to tax on 50 lakhs plus total income minus 50 lakhs. And up to 1 crore. 1 crore and 2 crores tax on 1 crore with such as 10% and more than 1 crore and total income more than 1 crore. 2% to 5% is such as 2%, 2 crores up to 15%. Total income minus 2 crore. And 5 crores more tax on total income 5 crores 20% plus total minus plus total income 5 crores. The local authority and the cooperative society 1 crore 2 crore. Total income 10 crores with surcharge of 7%. Total income of 10 crores. Total income of 10 crores with surcharge of 12%, 2% in total income. Example of marginal relief assuming that the cost of a resident individual is 32. Case of resident individual is case of 32. Case number total income 50 lakhs and income tax of 13 lakh 12,000 such as 0. 14 lakhs 10,000, 13 lakh 12,000, surcharges 1 lakh 31,500, 15 percentage. So 15 lakhs plus 13 lakhs, so 1 lakh 34,000, and total income is restricted to 1 lakh 42, 1 lakh 14, 42 lakh 0, 50 to 1 crore 0. Section 87 a rebate on the case of individual. A resident individual only limit on taxable total income rebate up to the normal tax regime up to 5 lakhs 12,500. Default tax regime section 115 BAC 7 lakhs to 95,000 up to marginal relief on the up to 7 lakhs up to 5 lakhs. The marginal relief up to new tax regime section 115 BAC, but the total income exceeds 7 lakhs. The total income payable on the when the total income exceeds 7 lakhs and the total income payable on such total exceeds total income less than total income exceeds 7 lakhs and total income tax payable on the total income exceeds less than 7 lakhs, assessee shall be eligible for reduction of it tax payable minus total income of 7 financial year 23. Example, total income is 7 lakhs, tax payable 25,000, remain 28,000. In the case of 7 lakh 5,000, 25,500, and margin relief is 0, and rebate is 0, margin relief will get 27,500, and tax payable is 5,000, incremental 5,000. Rebate is provided on the income tax before adding cess. The rebate is not available on respect to the 11A or 10%. எப்படிடா வருது? Rebate is provided on the income of tax before adding cess. And rebate is not allowed with respect to tax on section 11A, atom capital gain 10%. Health education is 4% plus 4% tax plus a charge. Rounding of the taxable income tax payable shall be rounded off the nearest multiple of 10. Example, 10,000 4 and we becomes 10,000 and 10,005 become 10,000 to 10. Revenue received versus capital reserve. The revenue receipts are considered as income and taxable under the head profit and sale of goods and interest income, etc. Capital receipts are taxable on the extent of specific mention act as a capital gain. Other capital receipts are not specifically mentioned as not taxable in this act. Example, compensation or delay in the delivery of the capital asset. Note all the capital receipts are not taxable. All the capital expenditure are not allowed as well. For example, expenditure income project is not related to the existing business and the project was abandoned without creating new asset. Expenses called capital in nature. Application of income which is this is a deviation of income. The income from the deviation of overriding title or source is called deviation of income, where when the income is applied after the accrues to accessee, the other due to the contractual obligation or excising a description is called application of income. Now, the application of income is taxable in the hand of assessee, where the deviation of income is not. And example, I paid the first month the salary to relative in the case of application of money, as there is no contractual obligation. RAM partners of the firms are as per the terms of resignation. It was included that 10% of the profit of the firm will be given to the sir. In this case, deviation of income and 10% shall not be taxable in hands of firm. In the case of lottery, as per the lottery agreement, certain percentage of the first prize is to be paid to the state government and the lottery agent. In this case, the lottery income is subject to legal obligation and therefore the amount paid to the state government of the lottery agent is the account of the legal obligation. Therefore, said was not taxable on the hands of the winner. Significant case law. CIT or Shaw Rata Cement Limited 210 SE issue where the liquidation damages received by the company. CID, which is Shaurastra Summit Limited, issue when the liquidation damage is received by the company from a supplier or the failure of supplying machine within the stipulated time is capital receipt or revenue receipt. Decision the damages are directly linked to the capital asset that is given. It is not a receipt in the course of the profit earning process. Therefore, such receipt is not an ordinary course of business because of the capital receipt. Section or auditor note. Author note section 28 2E shall not apply as the compensation is neither be the termination nor be notification of the original contract. The original contract still holds goods. Hence, this is compensation is not taxable. Honda Sile Car India Limited CIT issues when the technical fees paid under the agreement for setting up the joint venture in India is a revenue or capital expenditure where upon termination of the agreement JV would come to end. This is capital expenditure in joint venture. CIT uses Mr. Venkat Rao issue and capital contributions to individual partners and books of the firm's tax as a cash recorded in the funds of the firm when the partner has admitted the contribution but failed to explain the source of the recipient individual hands. Source of individual hands. Capital contribution of individual partner in the books of the firm is taxed in the cash recorded in the hands of the firm where the partner have admitted their contribution has failed to explain the source of the received in the individual hands. Relation section 68 cannot be represented against the firm. At most, inquiry can be made against the individual partner and not the firms when the partner has admitted a capital contribution. In the absence of any material to indicate that they are profit of the firm, such cash credit cannot be assessed in the hands of the firm, therefore it be assessed in the hands of the individual partner. Section 18A relief with respect to retirement benefit account. When a specified person has a income accrued and specified account, tax such incomes per and manner. The terms and meanings are known as notified country has been notified by central government, Canada, US, UK. Now, specified account retirement benefit account is notified country and the income therein taxable by such country on withdrawal or not accrual basis. Specific person resident when open such account when such a non-resident in India prescribed manner to be taxed in the hands of the income. Section 21A option to income taxable income at the option of the specific person. Such income shall be included in the hand of total income of the previous year. Prescribed the prescribed manner of taxation in section 21 AAA. Option 2 include total income. The option of the specific person's income shall be included in total income for the previous year in such income is taxable in notified country in the year of withdrawal. Exclusion from the total income. Where such offers excise in total income previous in withdrawal shall not be included income already included in the total income on accrual basis and tax paid in thereon and was not taxable in India due to DTA as such person being non-resident or resident non-ordinary resident. Foreign tax, if any, paid in such income would be ignored for the purpose of computation of the foreign tax credit. No withdrawal. The option opting to before section 39(1) due date once excise cannot be withdrawn where a person can become non-resident subsequently. The excised option excised above would be deemed to have never need be excised with the effect of the relevant previous year. Respect to the person became non-resident. Their income during the previous year of excising such option still became non-resident taxable in India. What you lack is talent can be made with a desire, hustle, and you 110% all the time. Meaning of business of profession. Business under section 2 class 13 includes any trade, any commerce, and any manufacture or any adventure and concern in the nature of trade and commerce and manufacturing. Profession under section 2 class 36 include vocation and occupation required some level of skills and learning irrespective of this degree. Notes of vocabulary voluntary receipt with respect to the legal obligation and business income taxable in hands of receipt, example lawyer. Voluntary receipt or legal obligation of our business and taxable in hands of law, example lawyer. Capital received is generally is not included in the head. Capital received is not generally included in the head. Considered to be included in the capital gain. Non-attack section 28 is necessary to carry business or profession at least some time during the year, but not necessary throughout the year. To attract Section 28, it's necessary to carry a business or profession at least sometimes during the year, but not necessary throughout the year. Assessing owner, attract 28 is necessary to carry a business or profession at least sometime during the year, but not necessary throughout the year. Assessing owner need not carry on the business personally to attract Section 28. It should be done under the direct or control. Illegality of the income does not exempt from its taxation, but however, illegal expenditure shall not be allowed as a deduction of Section 37. Case scenarios head and tail is taxable. Type of income and head. Plotting of lot and land and leasing is process to sale. Capital gains. Plotting of land, construction, colony, and increasing value of land. Business, business profit gain, business profit, business profit and gain of business profit. Interest income regular. Income from sources. Interest income, regular income from sources. Interest income and FD bank of a bank guarantees issued by the income interest income on bank guarantee or the bank for bank guarantee issued by such bank. There's BGBP. Machinery let out on rent during the factory lockdown. BGBP. Let out of immovable property, house property income. Acquiring and letting out of immovable property mentioned on the acquiring and letting out of immovable property mentioned in the business of AOA. Any property investment related to BGBP. Rental income on property and held on SIT by the property holder. House property held as an SIT as an held SIT na. The profit and gain of the business or profession carried out by assessment officer during the revision. Any competition or other payment due to received under any person, the termination or modification of charge of TNC, modification of any terms and condition of any business contract. However, compensation with respect to termination or modification of employment contract taxable under the head salary and as amount is paid by the employer section 70 clause 3(1). That is the amount is taxable under section income from households. Salary income derived from the trade or professional similar association specified service performed by the members. Profit and sale of license granted by the importer under section 115 and import and export control. Let's replace business income. Cash assistance received or received by any person against export or any schemes by the government of India. Cash component support is business income. Any duty of customs excise repaid or repayable on drawback to any person against export under the customs and central excise duty drawback and its business income or profit or transfer or duty entitled to passbook scheme, duty remission scheme under the export or import policy of foreign trade development. 92 is business income, any profit or transfer of duty free replacement certificate between duty reimbursement schemes under the export and under the foreign trade development certificate. 92 it's a business income, a value of the benefit of purchases arising from the business or profession, whether convertible into convertible money or not, or in cash or kind, or partly in cash or partly in kind. This is business income. This is a pharmaceutical value of the air tickets to the island is incented by the meeting the target of business loan waived off. Package it received convertible into money or not, as kind of partly in received, partly in kind is business income. Any interest, sabon, salary, compensation of remuneration.